This week, it's time for my favorite segment, Security Money, where we update you on the latest security funding and performance of the public market. The Security Weekly 25 Index and the NASDAQ both hit all-time highs last Friday. In the Leadership and Communications section, in modernization, security is a barrier and an incentive. Federal CISO DeRusha maps FISMA reform priorities, cybersecurity salaries, what eight top security jobs pay, and more. Business Security Weekly starts now.
This is Security Weekly, for security professionals, by security professionals. Broadcasting live from G-Unit Studios in Rhode Island, it's the show where we explore the business of security to improve the security of business. Your trusted source for actionable insights on leadership, communication, and innovation. Get ready for Business Security Weekly. Stopping advanced threats requires knowing exactly what you're up against. ExtraHop Reveal X is the only solution that shows you not just where intruders are going, but where they've been. 90-day look back and complete network visibility across the data center, cloud, and device edge helps security teams respond 84% faster with ExtraHop Reveal X network detection and response. Explore the interactive demo at securityweekly.com/ExtraHop. We're proud to announce CISO Stories, a new podcast series in partnership with Cybersecurity Collaborative and Cyber Reason. CISO Stories features the candid perspectives and experiences of frontline senior security executives and dives deep into timely security topics. CISO Stories is hosted by Todd Fitzgerald, VP of Cybersecurity Strategy at Cybersecurity Collaborative, and Sam Curry, Chief Product and Security Officer at Cyber Reason. Listen weekly as they speak with extraordinary CISOs by visiting securityweekly.com/CSP.
Welcome to Business Security Weekly. This is episode number 225, recorded July 26, 2021. I am your host, Matt Alderman, here in Colorado. Joining me remotely are my co-hosts. First, Mr. Jason Albuquerque.
Great to be back. Sorry I couldn't be here last week. I was a little under the weather. Actually, a lot under the weather. Sorry.
You didn't have your booster shot. I don't know.
Yeah. Listen, I'm just glad it wasn't anything super bad, but it was definitely a head and chest cold that took me out for a few days.
Well, we're glad you're back. We missed you. My second co-host joining us today is Adrian Sanabria. Welcome, Adrian.
Hey, glad to see you back too, Jason. Yeah, cold like that's hard to work through. And this is also one of my favorite topics. I'm excited about this segment.
You, me and you put a lot of work into the segment. You just don't know you do it yet. I'll explain in a minute. Cyber Risk Alliance, in partnership with InfraGard, has launched the Critical Infrastructure Resilience Benchmark Study. Measure your readiness for ransomware by completing the survey and getting your score. Visit securityweekly.com/CIRB to take the survey. Security Weekly Unlocked will be held in person this December 5th through 8th at the Hilton Lake Buena Vista. We are excited to announce our first round of speakers: David Kennedy, Alyssa Miller, O'Shea Bowens, Marina Ciabatta, Patrick Coble, Chris Eng, Eric Escobar, Kevin Johnson, and Justin Kohler. Visit securityweekly.com/unlock to register and check out all of our rock star lineup. All right, so this segment, I was explaining it to Jason right before the show. This is one of my shortest segments we ever do on the show, but it is the longest prep time by at least a factor of 4. And here's what I do, and Adrian, I'll pull you into this because you do a lot to actually support this segment. First thing I have to do is I have to go out and get all the stock prices over the last quarter for the 25 companies that are in the Security Weekly 25 Index. Okay. Then I update all my charts. Then I have to go look at all the analyst earnings reports for last quarter, update all of those, and the analyst ratings for each of those stocks. And that's before I get to the private side of this. There, I go to Enterprise Security Weekly because you and Paul cover this pretty much every week, and I literally use our own Enterprise Security Weekly show to pull together all the private funding announcements, and there were a ton last quarter. So thank you, Adrian, for all your help.
Well, in the near future, hopefully we're going to have all this in a database. You know, we've got a really good start on it. But in the future, hopefully, Matt, this is going to be a query for you.
Nice.
Oh, I can't wait. Well, right now it's a pretty big query, and it's a Google sheet, actually. The way I pull all the pricing in is through a Google function that I have not migrated over to Excel. So I still use my original Google sheet to actually pull all these numbers every quarter. So another
automate
spreadsheet
that, Adrian. Automate that for the poor guy, would you?
Yeah, well, it's funny because I've got my own Google sheet from back when I used to be at 451. That I would use to track all the IPO data of pure play cybersecurity companies. I wouldn't include, companies like Cisco and stuff like that. It gets kind of crazy if you include anybody with any kind of cybersecurity product. But yeah, Matt, when you shared this earlier today, I dusted off that spreadsheet and updated a few things on it. So, and we've got that data in the database too. IPO data is pretty interesting to look at.
It is. So I did the same thing with the index, right? It's only the pure plays. There's 25 in the index. We had 3 IPOs this last quarter. So there's some interesting activity going on. Let's get into some of the quick numbers, right? The index closed at 2,658.45 cents. When I created the index over 2 years ago, I have data going back to, I think, late 2017. I set the baseline at 1,000. So that means we're up 165.85% since I created this index. That's a pretty good return over the last couple of years. Yeah. I'm just saying, if you invested in the index, you'd be doing pretty well right now.
Absolutely.
Do you also know what the performance is versus the NASDAQ average?
Yeah, so I tracked the NASDAQ. I baselined the NASDAQ. So the NASDAQ closed at an all-time high on Friday as well, 14,836.99 cents. That's up 123.61% during the same time frame. So what you see, it's interesting when you look at the graph, which is embedded in the show notes for the segment. When the market's going strong, the index kind of outperforms the NASDAQ in general. It's an interesting phenomenon. So it's performing better. On the downside, though, it typically lags. So it has a little more price action. So it has a higher beta, if you're using an investment term, than the actual NASDAQ. So when it's up higher. When it's down, it's usually down a little lower than the NASDAQ. But yeah, definitely still performing extremely well against the NASDAQ. Quick summary. Revenue beat by 2.32%. So that's an average beat of revenue across the 25 stocks. Now that's down from last quarter. It was closer to like 5%, I think, beat. Same with earnings. Earnings only beat by 25.57% on average, which is down from last quarter. It was like 40%, right? So what you're seeing is you're starting to see a little tightening of expectations to performance in this quarter. And I think part of that is the analysts are starting to figure out how to evaluate some of these companies, because you have a lot of newer companies in this index, CrowdStrike, SailPoint, Ping. So they don't have a lot of history on how to rate or how to predict revenue and or earnings for these. And I think the analysts are starting to get a little better. So you're starting to see the beats tighten up a little bit, but there are some big misses too.
Is that a tell for the future, though? Is that a tell to kind of say that we're about to explode? I mean, are they really digging in right now, doing research, and because everything I'm seeing is that, especially with one of the topics we're going to talk about, proof point, right? This is kind of a catalyst for what's to come. Everything that I've been reading. So is that a telltale sign?
Well, it's hard to say. Here's what I think is expectations will be more aligned, which is a good thing for the markets because you don't have large swings. But on the other side, when you look at some of these valuations, and we're going to talk about this with some of these IPOs, the valuations in this market are super, super strong. I mean, crazy strong. When you look at acquisitions that are happening, we'll talk about Proofpoint and ExtraHop. When you look at the IPOs for KnowBe4, Darktrace, and SSS, who was the other one? Sentinel One. I mean, holy cow, right? So I mean, I think expectations are good because that's less of a swing for the market. But I think what you've definitely seen is a lot more focus on this industry with a lot more upside potential, Jason. It's just kind of hard to understand how it's going to all come together and perform because in the public markets, we've seen some very interesting anomalies, is the way I'll say it, right? A company will go public. A couple years later, they get taken out and brought back private, right? Like a Proof Point, like an Imperva, like some of these other companies, right? They went public, took a round of money, and then somebody took them out of the public market and took them back private with huge valuations. So you don't always have to go public, as Extra Hop proved last quarter with a $900 million exit. They didn't have to go the IPO route to get a big valuation.
Right.
Yeah, and also Netscope recently saying that they don't really need it. Like they're fine on capital. They raised what they said is going to be their last private round. And yeah, they've been talking about IPOs, but I mean, if you know, of course there's a measure of this that you have to take with a grain of salt because you know, they're not going to tell you. But but you know, it seemed pretty believable. You know, when they say, yeah, we're just not in a rush to go IPO. And I think I've had this long running opinion, you know, that one of these days there'll be enough data, you know, to tell whether it's true or not. But, you know, generally I think security companies do better public when the product is simple and doesn't, or at least the problem is simple and doesn't change often. You know, so like identity management is a pretty stable space. But endpoint security, on the other hand, I think is pretty tough to go into a public market with because generally, you know, public shareholders don't like a lot of change and risk. And sometimes in cybersecurity, to stay relevant, you got to tear up everything you've got and start over. You got to pivot. You know, you got to do all this stuff that make shareholders very nervous.
You're right. No, that makes total sense.
Yeah. And you start to see this a little bit in the results. I want to get into some of the kind of best and worst during the quarter, right? So best rated, Variant, VRNS, Tenable, and CrowdStrike. I mean, these are names that have been there before.
Yep.
Variant and VRNS kind of came from really down to having turned themselves around a lot and kind of resetting expectations back to the analysts are figuring the market out. Worst rated, I mean, SecureWorks is been on this list quarter over quarter.
It's a staple on the list.
The analysts do not like the MSSP market for some reason. I think it probably has to do with profit margins, is my guess.
Yeah.
But man, this stock has just not been well rated for quarters on end. QLYS is here. QLYS, you know, with Philippe's passing, some change of the guard. They're going through some stuff. I love what QLYS does. I mean, having worked there for almost 3 years, watching what they do from an innovation side, I like what they're doing. The analysts don't see it yet. So they've been on this list. Checkpoint is on this list again.
Yep.
Checkpoint has really struggled kind of breaking out of the firewall market. They've made a lot of acquisitions, but have they really put the right new messaging in place to drive the market? And NetScout showed up, you know, as one of the worst rated on this list this time.
Yeah,
I mean, it's go ahead, Adrian.
I was just going to say with SecureWorks, you do see them attempting to pivot. You know, this scramble towards having more of a product presence. You know, they've got an XDR offering now, and they have a vulnerability management offering now with the acquisition of Delve Labs. I'm not sure if they acquired somebody for the XDR piece, and then they've had Red Cloak for a while. They used internally, you know, and kind of waffled around on whether or not to sell it as a product for several years, long before they were spun out as a public company. But yeah, it's interesting to see that, and then at the same time, you've got like who was it? Arctic Wolf has this crazy valuation that you don't normally see for MSPs.
Yeah, you know, I was going to say the same thing about SecureWorks, about them diversifying, and it was a company. The XDR was an acquisition. It was Taegis, something like that. TAEGIS.
Yeah, they use that name for both of them, I think.
Yeah.
For all their products are called Taegis now. That's just like it's like Cortex for Palo Alto.
Yep. Got it.
Yep.
But I believe it was an acquisition. But I was going to say from an MSSP perspective, I've had lots of conversations with Arctic Wolf, and they deliver a lot differently, right, than a SecureWorks. And I think that's the differentiator. They follow, that kind of pod model where, you have a pod of folks who understand your business, and they understand your needs, and they have a deeper relationship model than I think a SecureWorks does. So I think that's where their value is coming from.
Clearly, something's working.
Yeah.
Right, for them. Yeah, absolutely
Yeah.
true. I think there's another funding announcement. It was last quarter or this quarter.
Mm-hmm.
And when you look at some of the best, I mean, SecureWorks had a good quarter, don't get me wrong, but the analysts have dropped the expectations so low that eventually they had to have a good quarter, right?
Mm-hmm.
But then you see CyberArk, Tenable, and Zscaler. I mean, Zscaler's made a ton of acquisitions in the space, continue to grow. Ping and SailPoint were actually on the worst performer list. They've been traditionally some of the best performing stocks since they went IPO. They took a little breather, and again, it's probably analyst expectations grounded in reality for some of these earlier stage kind of into the market companies. Because again, Ping and SailPoint coming from the identity side, outside of CyberArk, you really didn't have anything to measure them against in the public markets.
And missing here that I find interesting is FireEye. Like there's just nothing to talk about with FireEye except the fact that now the company's been split up again.
Yeah. I mean, we will hit it in the key highlights, but to your point, they've never been on the worst performer or the best performer. They've always kind of been like right in that middle tier. They're performing, right? But when we get to the highlights here in a second on the public market, the spin out of their product segment to STG, it's a very interesting approach because you think about valuations for a second, right? Product has a higher valuation than services, for example. Why? Because you develop once and you sell it n times, where services have a tighter correlation to number of resources. So having FireEye as really going after the services side of the market is like, wow, how's that going to play out long term? We'll see, but it's an interesting approach because it's not one often taken.
Well, and what's interesting about that split is Mandiant takes, they came into the relationship with some of the products and they're leaving with some of the products. So like the SOAR piece, I believe, leaves with Mandiant, what was CSG Invotus. And then FireEye keeps the stuff that's more prevention focused, the stuff that was built on the original, what was it called? MDS, I think was the technology for, finding interesting malware and stuff like that.
Got it. 3 IPOs last quarter. We kind of touched on them last quarter because KnowBe4 and Darktrace was right. They went right before we did the segment last quarter. So KnowBe4 hits the NASDAQ at a target price of 16, opened at 19.95, closed on Friday at 26.91. So I mean, almost a 2x, not quite, with a high of over $36 a share. Darktrace came out on the London Stock Exchange. Their target price was 250 pence, opened at 358 pence, closed on Friday at 692 pence, so almost a 3xer on that one already for Darktrace, with its high actually at 787 pence, which is over 3 times its original target price as a high for a stock that's only been on the market for a few months. It's crazy valuations. And then Sentinel-1 went on June 30th, right before the end of the quarter. Target price at 35, opened at 46, closed Friday at 46.56 with a high of 54.05. So again, a good performance, but the valuation on Sentinel-1 at one point hit $10 billion for its opening on the opening day.
Oh my. Yeah. I mean, just looking at these 3, I looked at KnowBe4 because that was very, very interesting to me. And as I looked into them, they're very focused on annual reoccurring revenue, which I think is great because that's stickiness, right? And 2020 was 198.4 million in ARR. And on top of that, they don't have any net debt, which I think is absolutely amazing from an operational perspective, right? So very little debt, and very high annual reoccurring revenue. So stickiness with the customer.
Yeah. It's a great model to have, especially when you're public.
Yep.
Yep.
Yeah, and just I need to correct my earlier statement with FireEye. It's not the SOAR piece that's going with Mandiant. It's the breach and attack simulation piece, VRNT.
Oh, got it. Axonius is planning an IPO yet this year. That came out as news. I don't know when they're going to come out. I didn't see a specific date, but it looks like they're prepping. We know Tanium's been prepping for a while. There's a couple others under the covers that are, Lumio took a big investment getting ready for IPO. So there's a few more lingering out there. Some other highlights that I thought were interesting. Dell spins off VMware, right? So they finished the spinoff. After the EMC acquisition, I think Dell owned 15 to 25% of VMware or something. I don't know what the exact number was. It was part of that EMC deal that happened. They spun off the rest of their shares in VMware. So now VMware, it doesn't have the Dell component. We talked about FireEye spinning off its products to STG. And then another really interesting thing for me was Splunk raised $1 billion from Silver Lake as a public company. That's a lot of money when you're in the public market. So Splunk's gonna do something soon with $1 billion purse behind them. They're gonna make some moves.
That's absolutely amazing. Yeah, I think the whole Dell VMware is interesting as well. I mean, Michael Dell still remains chairman of both sides, and at the end of the day, you're watching. So I'll say the folks at Dell are making out way better than VMware, because Dell's going to take that $9.5 billion and pay down a crap ton of debt, and then VMware is going to suck all that in and take it on. So the folks at Dell are making out, no doubt.
Yeah. Well, look. Go ahead, Adrian.
Be interesting to see what Splunk does, because I think the model works well. I think that's been proven out. But anytime you hear somebody talk about Splunk, and they still have a ton of customers, but usually it's some kind of complaint about the the pricing, the expense of Splunk, to the point to where there's entire consultancies and companies just dedicated to helping you optimize your spend with Splunk, just like people optimize their spend with cloud vendors and stuff like that. And there's a whole market of folks that are like 1/10 the cost of Splunk, that are aiming at their customers.
Yes, it's been a big pressure point for them for a long time, and it's not going away anytime soon. So they're going to have to make some moves to continue to innovate and continue to keep that customer base, because you got a bunch of ankle biters coming after them for sure. No doubt about it.
You don't want to pull an HP or a Symantec. We've seen this story play out, man. Symantec, the whole next gen AV thing and EDR thing, they were so late to respond to that. There's no numbers, or maybe there are on. I don't know if they broke it down by endpoint in their public statements. But I heard rumors about how much they're losing every quarter, every month, and it was a landslide of revenue going out the door. Yeah,
not fun. Let's shift over to the private market for a little bit here to finish up this segment. Funding just stays strong. Like I said, I go through all the enterprise security weekly show notes for the last quarter to pull these numbers out. There is nothing under 20 million in here, because this list would be too long. The top 3 deals are $1 billion by themselves. Transmit Security, Acronis, and Illumio. That's $1 billion in just 3 deals.
I couldn't believe it when I looked at the Transmit Security information. Their pre-money valuation was $2.2 billion. Holy Lord.
and these are not acquisition prices. These are funding rounds.
Keep
that in mind, anybody listening. These are funding rounds that we're describing.
Funding rounds. I mean, just some big stuff. Exabeam's $200 million. Sysdig, $198 million. I mean, the number of 100 million plus deals this last quarter is just astonishing. It's crazy, the money that's out there.
And didn't they describe, wasn't the Transmit Security a Series A, to boot?
Yeah.
not only $500 million. Oh, it's a Series A. Of course, that's, if I recall, it was private equity backed. You don't see VC rounds get up nearly that high. Not
No,
yet.
you need a no, not yet. But I mean, there were some big. There was even a $50 million Series A. I mean, that's still huge for Series A, $50 million, right? I mean, we used to see them back in the day. We were kind of 3 to 5 million. Then they kind of went 5 to 7 million. Then they ticked up to about 10, 11 million. 50 million just blows the doors off of an A. It's crazy.
Well, I mean, what you see now is you're seeing entrepreneurs and people who have been, kind of grown up with entrepreneurs, set out on their own and go after a corner of the market. That's pretty sizable. Like if you're coming out of the gate with a big, broad identity and access management play, you need a lot of funding, to attack that quickly, and especially if it's a growing market. And we see people coming out of Stripe and some of these huge companies that have had these huge exits and huge funding rounds, and they're capitalizing off of that momentum from the company that they're coming from. So in a lot of cases, it's almost more important. I'm not sure how interested the investors are in what they're currently doing as they were where they came from and how successful that organization was.
Yeah,
I'm sure it's a mix of both.
Probably. And you see some of the starting to play through in the acquisitions last quarter. So Extra Hop, we talked about at the top of the show. They've been a fantastic sponsor on the show. Congratulations to the team. But they skipped IPO. They went straight to an acquisition, a $900 million acquisition. Very interesting approach, right? Kind of skipping the IPO route. Could have gone probably IPO, but why put yourself in the public spotlight sometimes? So that was great. And then you see the activity. There's certain vendors here that you just have to realize they're making investments, they're making moves. Zscaler, another acquisition with TrustDome. Yep. ForcePoint made 2 acquisitions, Cyber Inc. and Deep Secure. Splunk made an acquisition. Microsoft did Refirm Labs, and what's not in this quarter because it happened after the fact is a Risk IQ acquisition by Microsoft. So think about that for a second, right? Microsoft's starting to make some moves in this space, which are really interesting, Adrian.
Yeah, big time. I mean, just so you guys know, I was at the partner conference last week. I went Tuesday, Wednesday, Thursday to Inspire. And I will tell you that they are literally weaving security into every single conversation, no matter what it is. Everything, whether it's, their cloud hosting, their collaboration, platforms, it's literally woven into everything to the point where they're starting to spin out vertical specific, Azure tenants and M365 tenants. So they can, you can focus, obviously they have their government cloud, but now they're starting to do nonprofit clouds and things of that nature. So they can tailor, the security and compliance strategies around it. It's absolutely amazing. It's woven into every single conversation that I was on.
Yeah, and last week they announced they just acquired or intent to acquire CloudKnox also, which is like a cloud governance, that kind of play.
And this is what the analysts have been waiting for a while. Like if Microsoft got serious about security and started down this path and started integrating it into O365 and Azure, does that change the dynamics of these point solutions in the market? The answer is absolutely yes, right?
Of course it does.
And now you're starting to see it.
Of course it does. I mean, think about it. Microsoft has owned identity for the longest time. I mean, Active Directory is identity, right? And now everything's up in Azure Active Directory, and they're just making a go at it and trying to own it all. And I mean, how can you start to compete if you're a startup identity management organization and Microsoft is putting all their capital behind building it out natively within their platform? You're going up against the behemoth.
Yeah. And it's interesting because the merger of Thycotic and Centrify also happened last quarter, even though we kind of touched on it before. But Centrify was a heavy Windows Active Directory play. Does that create some challenges for them going forward?
Right. I personally, I'm going to say yes, because just knowing just the conversations and you know, the extreme focus on making security top of mind and top of every single session. And again, it wasn't like I went and attended just security-based sessions. I went to their unified communication team sessions, and it was compliance and security woven into that. You know what I mean? So they're literally trying to push it in every single aspect of what they do.
You know, it's when you see a company going in this direction, doing a bunch of acquisitions, building a lot of stuff internally, you know, it's just like the public clouds. You know, it's competing with them is a risk, and complementing them is also a risk. You know, because they can quickly make an acquisition, and you know, what are people going to go with, the first party offering that's built into a subscription price, or a third party offering that maybe does a little bit more? You know, it's a bit of a risk. So like we saw Tenable add their first new product in a while, which is an Active Directory product. And, you know, that's one of those positions too. You know, Microsoft can add that type of thing, you know, and just make it completely free and built in. It's a risk.
Right. And the other very interesting point, Adrian and Matt, is they're very much focused on being vendor agnostic as well, because they're actually bringing in connectors to other third-party cloud services like Salesforce, where you can actually suck Salesforce data into your security and compliance suite and start doing, let's say you want to do a NIST level compliance scan of the information. They have a connector to Salesforce to do that. They have a connector to other like AWS and GCP. So you can start doing security and compliance evaluations of third-party cloud products. Their Sentinel SIM product, log sources from everywhere, right? It doesn't matter. It's more of a traditional type SIM product, but at the end of the day, if it's in the Microsoft stack, it's either highly discounted to bring it in as a log source or free, depending on where in the stack it is, right? So you know, they're making these very, very strong plays.
Yeah, they got bits and pieces of that SASE stack now. I don't think it makes sense for them to go full zero trust, because there's a lot of stuff that they don't play in at all, like networking. But they do have a CASB piece. They do have the SSO IAM piece. They do have some key pieces of that. And another big one they just announced is the Windows 365. Yes. Which is their desktop as a service offering. You know, so now, you know, kind of catching up and competing somewhat with the, you know, VMware's, AWS, you know, some of the other desktop as a service providers out there. And of course, everybody who's doing desktop as a service, it's all Windows, right?
Exactly.
So, when Microsoft comes out with their own,
and again, platform agnostic, right? You know, I was in a session where I could bring up my Windows PC on my Android phone, and functioned pretty goddamn well. I'm not gonna lie. You know what I mean? Yeah. So
Paul all the time talks about his favorite browser in Linux is Edge. You know, and just about everybody, you know, most developers I know use Visual Studio Code, VS Code. Whether they're on a Mac or Linux or Windows. Right. Like Microsoft made that step right. You know, that was a smart move to, you know, stop bashing the competition and know thy enemy.
That's right. And it's funny because, you know, I start, you know, spinning my gears and thinking strategically, and it's like, all right, why wouldn't I want to bring Salesforce as a log connector, you know, into or an app connector into M365? And then, hey, by the way, I can start showing you the deficiencies in Salesforce, so I can start selling you Dynamics, right? Or I can show you how much better integrated a dynamic CRM is than a Salesforce into the entire stack, you know. And it gives them the ability to you know, start selling in different areas, because now those third parties are connected and deeply rooted into their stack.
It's going to be an interesting quarter to watch. I'll give you all the updates, you know, in another 3 months or so. In the meantime, we're going to take a quick break and then cover the leadership and communications articles for this week.